now that's moved to Discord rooms where information flies, people are on voice. So you have information moving really quickly. And that flow is, I think, a product of the kids growing up the way that they did. They're used to communicating this way.
Appreciate you being here, Brandon. Nice to meet you.
Yeah, same here, man. Same here.
Yeah. And welcome, Sam. I figure what we'll do is just kind of keep this, I don't know, we'll call it the SimCast Unplugged. So just kind of keep it casual. See you drinking a Topo Chico there, man. I like those.
Yeah, it's a lime too. It's the best. So if you're gonna get it, you might as well just get a little twist of lime in it.
Yeah, no need to squeeze a lime in it. That's awesome. Hey, no, we appreciate it. So Sam kind of came up with the idea of inviting you to the SimCast just to kind of get to know you better. You've been around for a while, haven't you? I mean, you've been in you used to be a moderator in some chat rooms or a chat room. Like what's tell us a little bit about your background. How did it all get started?
Yeah, man, I went so I think it was like the 4th of July, probably back in 2011. I remember we had like the whole fireworks show, the whole thing, and I got drunk and I was like, you know what? I really want to take this trading thing seriously, believe it or not. And then I went home that day and I found the IU crowd. So I joined. Yeah, I've been part of them for a long time. Good group of guys. And
what year was this again?
This is like 2011, 2012 at the latest. So it's been a while. That's whenever I really like went from, okay, I'm doing this casually to like, okay, now all of a sudden I'm going to start taking it like seriously and invest in education. What's that?
You've been going for, can you hear me okay?
Yeah.
So you've been going for like a little bit over, I'd say like a decade then.
I say you're coming up to your decade anniversary then by the sounds of it. Or you just passed it.
Yeah, I started like kind of dicking around with it back in 2008, 2009, like whenever the financial crisis actually happened. I saw a guy that I was working for, saw him turn like 14,000 into like 140K in about 6 weeks. And I was like, holy fuck, this is something different. And I was making like 50K or whatever a year at the time and had been putting money away and all that stuff. And then kind of was like tinkering around with penny stocks and all that stuff. And then slowly started to ease out of that as they died off. And, started focusing more on small caps, which is pretty much my specialty now, if you will. And didn't really ramp up. Like I was kind of consistent, I would say, from 2014 was the year where I kind of like broke out. And then from that point forward, it was kind of like range bound what I would make per year up until Corona hit. And then that was when everything just blew up. So it took.
Were you, so you were kind of dabbling in things and then you got serious around 2011, it sounds like. And then was it like a 3-year period till 2014 that you actually became consistent?
It took about 8. So after I joined Nate's room, it took me about 18 months or so to get to where like I felt comfortable. Okay, I can make, 5-10 grand a month, whatever it was, to like, not necessarily every single month. Like some months will be better, obviously, and then some months will have a drawdown, whatever. But yeah, it took a good while of studying and figuring out, okay, what is it that works for me and my personality type and all that stuff. And then I got married like late 2014 and then kind of like stagnated, if you will, just being newly married, having new responsibilities, moving. Like we had a kid in that time frame. A lot of stuff changed. And I was still working throughout all this too. So it wasn't until we bought a business and that allowed me to step out of the workforce. And that was in 2018. Yeah, 2018. And from that point forward, it was more like, oh shit, now it's like sink or swim. Like you gotta make it, right? And there was some ups and downs in that process, but you stick with it. And also being able to focus 100% on the tape all the time made the biggest difference. But we had to build up that cash cushion to make it feasible, especially with the young daughter and all that stuff too. You just want to be smart about it whenever you go full time, for sure.
You
So
were working like 7 years, is that
I was going
right?
to say 7 years. That's quite a long time to be juggling.
Well, now
two
here's
quite
the
big
deal.
commit.
If you were a single dude, you could do this shit and just say fuck it, right? But you can't do that when you have a wife and a newborn. You got to be responsible about it. So that was kind of a hurdle that we had to overcome, but we did it. And looking back, I wish I had done it sooner, but I was being conservative.
And I guess because I'm British, so I don't worry about health insurance, but I know that you guys tend to get your health insurance through an employer and things like that. So I guess that leads to perhaps being a bit more conservative anyway. I don't know if I might be just making that up, but
no, it's correct. We pay $1,600 a month for health insurance for our family of 4. Yeah. And it's run through our daycare that we own, childcare center.
That's how much I pay.
Yeah. Well, you pay.
Well, I get taxed. Yeah, you get taxed heavily. We get taxed heavily. Yeah. Yeah.
That's the way it goes. Nothing's free in life.
No, that's true. So you said obviously you got drunk and you decided you're going to take it seriously. What did taking it seriously look like to you? Obviously, I know you mentioned you joined IU, but what was like a typical day, week, or whatever?
So I've always been a night owl. I would stay up literally till 1, 2 o'clock in the morning and then get up. I had to be at work for 7:30. So I would get up at like 6 and just kind of like review what's happening and all that stuff. This was right around the time Nate launched his, like, I guess in the beginning, he was doing it only on Sundays. So, watching that every Sunday, reading a scan every day, trying to figure out like, okay, what is it that he's looking at? What am I missing? All that stuff. So yeah, I mean, just a lot of chart work. And then after a while, you start to see these patterns and the patterns repeat. And it depends on where you're at in the cycle for those patterns to be relevant. So like bear flag breakdowns, that's like my A1 101 setup, which means you got a big ass move in the morning, comes down, comes back up. Now you have a volume liquidity point to risk off of, right? So you can size into that move as it starts to trickle up, and then you watch the tape get heavier and heavier and heavier. And then all of a sudden it's later into the day and it starts to fade off. That is like my A1. If I had one setup only to trade for the rest of my life, that would be the one.
That's cool. Is that cool. Similar, Sam? Do you think is he talking about like I'm more geared towards the long side, Brandon, but it sounds to me like, is that like one of those late day fades, like kind of like a bloodbath type setup, where it kind of walks? Yeah, I think it's kind of like walking the plank back up towards that liquidity area, and then basically does like a cliff dive.
I think market makers need to accumulate a certain number of shares, and so if you look at volume profile, you'll see where they're trying to position, in addition to what they're doing on the tape too, right? So there's variables involved, and once it starts to like churn volume, but it's not really moving very much, it's like, okay, let me throw out something and see what they're going to do. Do they take it fast? Then you start to layer in higher, it's just churning, and it's really not getting traction, but it's butting up into that, maybe slightly breaking that volume area. And then next thing you know, you're starting to look for weakness. And then that's when you catch your late day dunk. That's For me, I don't typically trade until around, call it 10:30 market time, like Eastern.
Yeah.
So it
For the
sounds
most,
like, obviously you touched on patterns being important, but it sounds like your tape reading ability is just as important as well.
oh, dude, absolutely. The tape. So Peyton, the guy that I work with, Juice, whenever he came on, I was like, look, you have to pay attention to the tape. It is the most important thing in this, because a chart is just a representation of what the tape actually is doing, right? Your time and sales are the prints that create the chart. So if you can read order flow, then you have a leg up. Now, the chart gives you indicators on when things are overextended or oversold. So you start to correspond those things with the activity on the level 2 and time and sales, and then you start to get a better understanding, and liquidity pockets too. Like, that's a huge part of it.
So, and how do you get good at reading tape then? What's the process?
Watch it. Unfortunately, there's no shortcut, dude. I've looked all online. I've looked everywhere for classes and this is an avenue for somebody that wants to get rich. Put out a tape reading class. But the easy answer is there is none. You have to watch it.
Yeah. No, that's fair enough.
You think the tape tells you everything? I mean, is it, or you've got, I mean, that's something that I struggle with, because I do like to watch the tape, but at the same time, it's almost like I'm trying to tape read by looking at the chart. And, you know, what you were just saying a moment ago really kind of resonated with what I look for. I just call it like effort versus result. So like you're talking about that churning, it's like there's tons of effort going into like this push back up, but it's like the result is not really matching all that volume down below it. You know, it's like this should be going higher with this kind of,
Well, those are called it's distribution points, right? So
yeah,
what happens is you have an accumulation zone, typically in the morning at some point, if the stock's going to run, for example. And I'm specifically talking about low floats here, lower floats, say 20 million range, whatever. They'll have a zone where there's a lot of absorption and a lot of buying pressure, etc., where they won't let it break that level. Okay, so that's typically going to be either pre-market or like right out of the gate, and then it'll shoot up. So whenever it starts to slow and it sets a new pocket up higher, that is where you want to see that distribution start to happen. And what you should see, if you do this correctly, is a migration back down towards a liquidity pocket that's lower. And I'm specifically talking about volume profile whenever I say this.
yeah. And for those viewers who may not use volume profile, it's kind of like the horizontal volume that you see, like
volume by
at
price.
Yeah.
Exactly.
Cool.
So that tells you. And then so the tape is important, but it's also only important in certain zones. So you can see accumulation. Like recently, we've had a few moves where a stock may set a zone, and then it goes over and under that zone, and then it'll consolidate. Looks like it's breaking down. Everybody's like, oh my God, all they're doing is sucking people in for that last push up. And then that's where you're like, okay, now I can see the actual liquidation happen. And I talk about like the soldier ad, like that is what I'm talking about, where they break through that zone and you can tell on the tape that they're full of shit. And so you're there slamming it with size up at the top so that it's essentially stops the move, at least for the short term. Then you have to reevaluate and say, okay, now what am I going to do? Like it's not you have like multiple scenarios in your brain already before you go into something like this. And you're like, okay, my risk is here. If they break this level, I'm out. But unless they do that and they hold it, I'm fucking holding it, period. Basically calling their bluff.
Yeah, because I've noticed like with a lot of your charts, you're getting pretty close to top ticks, what it
Mhm.
seems like a lot of the time. Um, and I like what you said. You tweeted something about something to do with some people just wait for fails and then they'll hit it, but then all that does is just increase your risk, where unnecessarily perhaps. Um, but equally, it sounds like you have to have a really good, read on the tape to be able to do that.
Well, so you have to understand the audience. And this isn't a knock on chat rooms in general, but I think at a certain point, there's a point where everybody's looking at the same thing. And then you have an opposing chat room, potentially, that's on the other side of that. And they each understand where everybody's at. And so if you're savvy, you can trade in between those ranges until one of them eventually wins out. But if you have, say, 5,000 people looking at, a 1920 breakdown, and it breaks down, it goes to 1890, and then it immediately reverses because another chat room has bought it up. Now you've got a whole lot of people that are short that now have people betting against them, and potentially with a bigger audience too. So you have to be aware of the psychology of each room now in this environment. When I started, it wasn't like that.
Can you expound on that a little bit? Because we were just talking with Ricky Analog recently in a little interview about what has become of like the state of chat rooms in this like post-COVID environment that we're in. Like it's almost like a battle of the boiler rooms or something like that. How's it changed since you got involved?
Oh man, it wasn't anything like this. This is a different animal altogether. Because now you've got, the way I like to think about it is, okay, so I'm 39. I grew up in a this is going to be a little off topic, but I'm going to bring it back to it, right? So when growing up as a kid, I played video games. And most of those were like single player games where like you start the game, you finish the game. Now you've got a generation of kids that grew up playing like Call of Duty, multiplayer games where they're on headsets all day. They're used to communicating extremely quickly. So you have a different dynamic of demographic, if you will, coming into the market that is now in their mid 20s, late 20s, that all of a sudden have a career, got some money. They are using different tools than we used to use whenever I first started. Twitter was kind of like, message boards were being phased out, like iHub. I'm sure you've heard of them, but if you haven't, it used to be like an old school, like Yahoo message board that was geared towards penny stocks and whatnot. But now that's moved to Discord rooms where information flies. People are on voice. So you have information moving really quickly. And that flow is, I think, a product of the kids growing up the way that they did. They're used to communicating this way.
It's interesting because I think they get perhaps as well, because I've fought this, but perhaps you get that sense of teamwork as well when your buddies are in a trade with you. I personally don't like it because it gives me more like I'm a bit perhaps more single player minded. I prefer being solo and not knowing what other people are doing because otherwise I get some bizarre conviction. But yeah, I see what you mean, like how all of a sudden there's this collective. They're all on their headset together, probably watching every tick, cheering every time it upticks, and then patting each other on the back.
Exactly. What's the kill count? What are we doing?
Yeah. We're murdering shorts. Let's get them. Yeah.
Right.
That's so true, man. Like that's going on like every single day, it seems like.
Yeah, it is. It took me a while to wrap my head around it. And I was like, once it clicked, I was like, okay, now I understand what's happening. And I don't really use Discord that much. Like I have a little private room with a few guys that I trade with, but for the most part, I've gotten rid of all of social media besides Twitter and Discord. And the main thing is, what's that?
Do you need to be aware of that kind of stuff? Like, do you need to have a pulse on what the rooms are doing? Or do you think that you can just be like, I mean, because when you think about it at like a pure level, they're creating supply and they're creating demand, depending on what side they're on. So technically speaking, I mean, do you need to be aware of what's going on unless you just like want to be in the fight, in the match with them, or can you just look at the chart and see what's going on?
In the past, I've always felt like I had to have that crutch of like a service or a room or something like that. And what I've learned is if you pay attention to the order flow and you can decipher what's happening, then you can pretty much get an idea because, eventually you see it enough times and it starts to be like ingrained in your head, right? So you're not guessing anymore.
Yeah.
You don't really need to know what everybody's doing because you already know. And the reality is too, like retail does have an impact on the market, but the vast majority of the movement is going to be created by funds and firms that have the capital needed to exercise whether or not, hey, we need to get an offering out. We've got an ATM that we need to get rid of. We've got XYZ. We've got a debt exchange agreement coming due, like whatever the case may be. There's an agenda with more money behind it than the retail people. But what goes back to shorting those breakdown levels is a lot of times I think that those firms allow these rooms to compete against each other to set that level. And then they take over from that point forward. So it becomes a situation where you're like, okay, and this is why I always talk about it needs to break and hold a certain level, not just break it, because breaking it's one thing. Anybody can break it. But coming back, testing it, and holding it and absorbing it, that's where you want to see the action, really. It's the reaction after it goes through the level. So if it holds that level and it consolidates over for a long period of time, you need to ask yourself, hey, what's really happening here?
Good point. So it sounds like these market maker guys are it's almost like they're chumming for sharks, and just all these rooms kind of come in and like let's see how let's see how much we can drum up in this thing until and then let that kind of define where our levels are going to be. We'll throw the offer out there, that sort of thing. Is that?
And then once just on that as well, once it breaks through, and then if you see it holding, are you then thinking, hang on, it's going to have another leg up, and that's where I'm going to be looking to short because I know they're going to be unloading at that point?
It depends. You'll see certain things like hidden offers, which they really haven't been doing a whole lot of that lately. I've seen it more recently in the past couple of weeks. Before, they would just blatantly put the size out there and so I would eat it. And so, looking at the tape and watching it, you start to get a feel for, I personally like order flow is important. Juice likes to use the actual prints themselves. I like to use level 2 activity, meaning say 15 is a level, it goes down under 15, say 1475, comes back up, it holds a 15 bid, and then it stacks. And then they may push it like 1510, 1520, and then it comes back down under 15 again, repeats the process over and over and over again until all of a sudden it tightens up, and then it holds at 15 level. And you're like, this fucking thing ain't breaking, dog. It's gonna go. It's gonna go. So, or vice versa, where it's starting to use that 15 as resistance, and then 15 is stacking and stacking and stacking, and then you're not really you have an idea for either direction. It's up to you to decipher what is it that's happening on the print side for me to be able to tell, okay, hey, this is the ultimate goal for whoever's trying to move this thing. And then once they get it to break in a certain direction, then the retail bails, right? And then they just collect it all back up at the next liquidity point. It's just
smart.
It's simple, but it's complicated at the same time, right?
I'd be interested. Would you mind sharing if we share a little visual here with some of your trades? I've got a few.
Yeah, go ahead.
charts
I'll
pulled
talk through them.
up. Let's take a look. Let me see if we've got, since it's kind of relevant here recently. Let me go ahead and get this started. Let me try this one right here. What do you think about this? So it looks like you were not one of the guys that blew up on this DWAC recently, were you?
No, I did lose yesterday on it a good bit long.
Yeah.
Waiting for the bounce that happened today. I was just a day early, and I knew it. I knew it early, but I was stubborn.
Was this kind of a more of an outlier? I'm not sure if it fits. Does it fit your typical style? Maybe you could talk about your typical style, because I think you actually went long on this one, didn't you? Do you normally go long?
Yeah, I've been trying to expand a little bit, because I typically, when we move into like the end of the year, you're going to have more of these kind of outlier long moves. And we've been in a market that was pretty favorable short side. So if you look on that particular chart, the 14 level was really important. And you can see there's a little inverted hammer there around 10 o'clock, which typically is kind of like a rejection move.
$14.
14, yeah. So go lower, like closer to VWAP at 10.
Okay, right in here.
But you see that inverted hammer right there. So what was happening right there is it was churning huge volume, and it made a move like a high a day break. And this thing, I think, hit 20 pre-market that day, but it inverted and it came down, and then it collected itself, and it was still churning. And I was like, man, I need to long this thing like right now, but the guy that I traded with, which happened to be short that particular moment, I didn't want to fuck it up. So I waited, and then I let it overextend into that 20 level. And I think I ended up with like an 1870 average, something like that. And then the lowest cover was like 1 penny off the low right there. And then I just left it alone, because I could tell at that point it was like, shit, I don't want to long this, because I know how these can unwind. But it felt like it was going higher.
So
like
this was
way
a
higher.
short, basically. You shorted from here basically down to here.
Yeah. Mm-hmm.
And that was enough for a $74,000 gain right there.
Yeah.
That's pretty
Oh
sick.
shit, that's massive.
And especially, I mean, just given the move. I mean, look, when you think about it, I mean, obviously, like, once you don't have like all of this on your chart, and if all you know is this right here, then this, even this right here was a massive move from what, $14 all the way to $20. I mean, that's a huge move.
I had something similar, except I didn't cover all mine, and then I had to, obviously I stopped out like high 19s, and then I had to leave anyway, but I was like, right, I'm this is not a short anymore. And then particularly when it then up halted, down halted, then opened higher, and I was like, oh boy, this is going really high.
Yeah.
Did you flip long here?
No, I did not touch the long until the 40s.
Okay, so up here, these were your dip buying up here.
And I even said it when I bought it. I was like, I'm going to be mad as fuck when this thing goes over 100 tomorrow, but what you going to do?
Well, hey, yeah, you never know, right?
You never know. That's right. So took the easy money and got out.
Cool, man. I mean, and that's, I mean, I think it's fantastic as far as like just the way you're thinking there. You're not afraid to take it as long as it's like the old saying, like, it's not so much being on the short side or the long side. It's about being on the right side.
Yeah, the way I always, and everybody's heard this term before, but it's like, do you want to be right or do you want to make money?
Yeah.
They're two different things.
Oh, that's a great point.
I love this chart, because like most of quite a lot of guys who I know that short then flipped around a similar time that you did. So basically, every short that then wasn't bent from this decided to flip and just add more misery to everyone. And yeah, we get the craziness. I love it.
Yeah, that's awesome. Why don't we pull up another long that you've got going here? So BKKT was kind of a, would you say a kind of a sympathy play to DWAC?
Not 100% sure, but yeah, I think so.
But it looks like to me like you did not start off shorting this. Is this it's kind of like your first long right in here, little dip buy?
Yep.
Walk us through what you were thinking there.
So the way it was trading, it was kind of very similar. You can draw a line almost in that 23 area, somewhere around there, 22 to 23. The way it was acting, it was kind of doing that over under. And I like to think of this as zones, right? Everybody, a lot of people get caught up in the trap of, my stop is this penny. Like if it breaks this, like I'm out. And I understand that part, but what happens a lot of the time is they fake out these moves. And just the way that this thing was trading, I'm like, if this thing dips, I'm pretty sure it's going to go. And I really like the story behind it, with it being, Bitcoin and MasterCard and all that stuff. I felt like it was a story that people could get behind. And, that makes it easier when you have like all stocks are like this, right? You have a product to sell, and that is your stock, whether it's an insider, whether it's an institution, whatever the case may be, whether you need to raise money. Think about Coke or Pepsi. I mean, you see their signs all over the place. Why? They want people to buy their product. So the more hype that you have behind a certain story, you can kind of get an idea of like, okay, are there people that want to get out at a higher price? So it essentially becomes more of a marketing exercise on what is it that's hot in this moment. I think crypto and credit cards merging together is kind of a big story in general. Like, yeah, this thing got killed today, but it could be a theme moving forward. Who knows? It just in the moment felt like a good long.
And you mentioned before about your volume bars on the left-hand side, volume profile.
Mhm.
Did that help at all in this situation?
Oh yeah, absolutely. You can see the accumulation, right?
Yeah.
So you dip it under it, set your base, it goes sideways. They even do the little fake ramp stuff move. And then next thing you know, off she goes.
Yeah. You know what this reminds me of is one of Nate's looks kind of like an ABCD type pattern.
Yeah. Yep.
But it looks to me like you're paying a little bit more attention to no, I mean, and correct me if I'm wrong. You study patterns, or are you just looking for, I guess, ways to exploit the tape once you just kind of see levels start to kind of play out on a chart?
For me right now, it's more about the levels. In the past, I still use moving averages, as you can tell. And I think that those are things that algos key on, particularly when they start to trend. So you'll notice like that tail right there before 2 p.m. where it comes down and tags the 9 right there, and then immediately gets bought up. Like that was a flash, like boom, instant. So you can tell there's something on it. They did let it break later, but then if you notice, all the moving averages converge. So this is showing you that it's coiling to do something. We don't know what it is yet.
Right.
And whichever way it breaks is probably going to use those moving averages to support the move later down the road. For the most part, in the middle of the day, the moving averages have nothing to do with what's actually happening. So if you notice, when this thing decided to actually break out, look where it based after hours, and then it tagged again.
Here.
Mm-hmm. And then a little higher.
Yeah.
It's like you
So
put an order in somewhere around, is that your 9?
yeah, basically I was playing off the 13 EMA in that area, which, so a lot of times these things tail, and the body may be above the 9, but the tail is going to tag that 13.
Okay.
So that's what you're looking for when you're.
Oh, right. That's smart. Yeah.
Yeah, you're watching for that for continuation.
And I suppose you've just got a wish order almost ready, waiting to go if that happens, or are you just instantly reacting and hitting the ask?
I typically don't. So like when a stock's on the way up, I'll put orders on, and then occasionally on the way down, I'll put them on too. But for the most part, I'm not like a typical, I guess, quote unquote day trader, if you will, somebody that trades like 10 stocks a day. That's just not my style. What I focus on more is like, say, 2 to 3, and try and really get an idea of what their personality is throughout the day, so that I'm zoned in and I know I'm familiar with them, and I'm not just chasing like every little rabbit that moves. And I think a lot of newer traders get sucked into that mindset, particularly when you're, like a chat room, for example, needs to generate interest to maintain members, because people aren't going to pay, $150, $200 a month to be a part of something where there's no action. But, a lot of my day is sitting around waiting for the trades that I want to actually do what it is that I want them to do.
Because on that, I think that's one of the toughest things because I'm in the same chat room. And I think that's one of the toughest things is there's a lot going on. Most of it won't fall into your breadbasket or whatever. And at first, it's really hard to ignore everything, because it feels like everyone else is playing like 20, 30 different stocks. And that, again, like you said, that I can't do it anyway. As much as I tried, I can't do it.
Yeah, my style, so in the beginning, I used to trade a lot more. And what I've learned is, for me personally, this is just Brandon, I like to take a big position on a trade that has high risk reward. And the win percentage, I've taken some big L's, mainly because this is kind of a relatively new system. I've only been tinkering with this thing for 3-4 months. So still needs more data. But what I've noticed is I would rather let the stock do its thing and set its liquidity points, its range for the day, and trade against that, and trade into. So I'm a short seller mainly. I've been tinkering with some longs here and there on good story plays, but letting that stock go ahead and exhaust itself, set a level, let it kind of work its way back up, and then use that upper level as your risk point or zone, if you will. If it gets over that and it holds, you beat me. Congratulations. But if you can't, then there's probably one place that it's going to go, and that's way lower.
So you're back testing this, or how are you testing this?
No, I don't back. It's all real time.
Just outcome testing as you see it.
Pretty much.
That's interesting. Obviously, our sponsor, as it were, is Tradingsim. And we obviously try to create the tools that are necessary to be able to develop an edge, right? So we've got like 3 years of market data that you can basically replay tick by tick, minute by minute, second by second, if you wanted to replay it, along with the level 2 replay. Do you think that that's like an important tool, especially even like for beginners, or even like seasoned vets for you who want to kind of go back and say like, how can you test something, I guess, strategy wise, and is that effective for just like coming up with say, risk to reward or probabilities for success. I mean, it may not affect your mindset that well as real money will. But how important is that replay? Because I know Nate talks about, hey, you need to record this. Hey, you need to record this.
I think seeing it, so I've been doing it long enough to where at this point for me, it probably wouldn't do much good. But the earlier you are in your career and being able to see those moves happen, especially if you have like real-time level 2 and you can see exchanges happening on the time and sales, like that's a huge edge. And it's one that's very difficult to develop because what they say, if you want to be an expert at something, it takes 10,000 hours. So you need to see it many, many times before you fully grasp. And even then, you still can be wrong. But for me personally, my style, I'm more of a the best way to say it, more of like an artist when it comes to this, as opposed to like, hey, I'm gonna crunch Excel. I tried it. It's just not for me. It doesn't fit my personality style. I'm much more like big picture. Okay, this is probably what the overall plan is for the day. Now, how do we tinker our strategy to fit within those parameters based on what we see? Now, some people like the model of calculating your R and calculating all these crazy stats and all this stuff. And what we do is try to simplify all that down so that it's not so overwhelming. Like if you look at my charts, there's a lot of indicators on it. And for the average person to walk in, they would look at it and be like, man, this is fucking weird. Like you got a lot of stuff going on. It all has a purpose and it all comes into play at certain points. It's just there as a visual for right now. It's not something that you're looking at every single second. I don't know if that answers your question, but I'm not the guy that's going to be calculating, okay, this stock gap 30%. What are the odds that it's going to fade? You know,
and within your circle, are you all artists, or do you have a scientist in there, or you?
We have a mix of people. We have a really good mix of people, man. We've got people that are good at stats. We got people that are good at reading the tape. We got good fundamentals. You know, so it's a really close knit group. It's a group of friends, and we all bring something to the table that, you know, is beneficial to each other. And it's kind of like when you make groups like that, you don't want to be in groups where everybody has the same strength. You want some diversity, for lack of, I mean, it's a huge word, right? You want that combination of things. And there's times people will say something. One of the things I like about the guy I work with, Juice, is it'd be like, dude, you're being a fucking dickhead right now. Like, take this thing off. Like, shut up and take it off. And like, all right, you're right. Fuck it. I'm gone. I'm out. You know, having that is invaluable. And I would encourage anybody to, I had a dream probably 2 or 3 years ago of having like a trading office where everybody was kind of independent, but like we all collaborated, if you will, in real time, like in the same building. And that alone cuts down a lot of the lag on like Discord and stuff like that. You can communicate a lot faster with somebody sitting right next to you than you can over the internet.
Yeah. No, I think that's interesting because some of my buddies, I'm probably slightly more on the artistic side, but with nowhere near enough experience yet. But the scientists amongst my group sort of do keep me in check occasionally, like you just said, and say, "No, you're trying shit there, Sam," or something like that.
Yeah.
It's good. You're right. It's good because you don't want an echo chamber.
Well, yeah, and you want to put your ego aside too. So like, no matter what anybody makes in the room, like P&L wise, it's not. I don't take that into consideration. It's like, if this guy's good at this and he says something, guess what? I'd be an idiot not to listen.
Yeah.
And a lot of people can't check that ego. And I still have it. There's times where I'm like, man, fuck you. I'm right. I know I'm right. and then I end up being wrong. And I'm like, oh. But it's just the way it goes, you know. It's tough to kill the ego, but it's necessary if you want to make it to the next level, for sure. And our goal is to limit drawdowns too. So like we got nicked up here in the last few days because the market has changed a little bit, but I'm extremely proud because in the past, last week probably would have been one of those weeks where you're like, shit, I just undid months of work. And instead, we were able to profit overall from those moves, which is awesome. Like instead of having to draw down, you're actually making money. And I know a lot of people got clipped, and it's unfortunate. I've been there. It sucks. I've blown up a few accounts, not big ones, but you know, it still stings no matter what happens. You know, it's still real money. And, you know, sometimes we just get reckless with it, and, you know, you don't want to admit you're wrong.
Let's hear some good stories, Brandon. I want to hear about these blow-ups. What are some of the biggest blow-ups you've had? Some learning experiences.
So I blew up a few small accounts, like 2K, 3K here and there, maybe 2 or 3 of those. And then I got kind of like, I was basically on the verge of bankruptcy. And I threw, using my credit card, because back in the day with SureTrader, you could actually literally like put your credit card, give them your number, and they would load your account up. And I was like, wow, I'm about to max this bitch out, and we're gonna. I'm like, what else? What do I have to lose at this point? I'm already in deep shit. So I reloaded my SureTrader account, and then you know things got moving, built it up. And then Fannie Mae came.
Was this that time that I think you posted something on Twitter about how you got married and you?
Yeah, I'm getting to that part.
Oh, okay, we're getting to the good part.
Getting to that part. So Fannie Mae rolls around. This is like 2013, I think, the first time it ran, maybe 2012. And it like ran from like 30 cents to around $1.40, $1.50. And then tanked all the way down to like 60, 70 cents. I bottom ticked it with everything that I had in my TD Ameritrade account, and then sold dead top. And I made like $7,000. And I was like, oh, I couldn't believe it. I was like on top of the world, you know? And then over the next few days, I milked it, ended up making like 22, 24,000, something like that. And then got over pattern day trader in that account. And then I had my SureTrader account. Both of these came from like 2, 3K. So keep that in mind. So I built that one up over to where I could trade freely. And then SureTrader eventually ended up just blowing up. And that Fannie Mae spark was kind of the thing I needed. Then the pot stock run came, and I made I mean, relative to what I'd been making before, this is like ridiculous. Yeah. And those are all OTCs. Mm-hmm. And so end up remodeling the house, get married, go on a nice expensive vacation. A lot of stuff happened. Ended up paying a big tax bill. And so I had like, I don't know, 120K left to my name after all this shit. After all the taxes were paid, then I lost like 85 or 88 on PBMD. And I was just like, fuck, I'm screwed. Wow. Yeah. And it was one of the situations where it went up, and then it went right back underneath my average by the end of the day, and then ended up going way lower. So I would have made a huge profit on it, but timing was off. And I almost blew everything that day. Thank God my brokers had risk management in place. Otherwise, I would have had to start over from square one.
Yeah, they cut you off with a little bit left, huh?
Yep, exactly.
Wow. How long did it take you to build back up?
3 months, I believe it was.
Okay.
That's pretty good.
Yeah, it's not bad.
Yeah, it didn't take too long. I knew what I was doing. It was just one of those trades, you know, it just came out of nowhere.
And just think, you're losing twice that much in one day nowadays, every once in a while, right?
Yeah, every so often. Like yesterday, I think I lost 150, and then today was able to make, I think, around 165, 170. So the further along you get in your journey, you get more and more desensitized to the money aspect of it. Like, I have enough money in my bank account. We've got everything we need in my house. So the money is just kind of like a number. And you don't want to think of it that way, but at the same time you do, because it's not, I don't want that number. If I make a mistake and I'm looking at it and I'm focused strictly on that number, like I didn't forget how to trade. It's just, I made a mistake.
Yeah.
And so it's recoverable, and you try to keep those mistakes to where you can make that back within, a few days, a week. Ideally the worst case would be a month, but I do the best I can to keep those where it's just like, okay, look, let's reevaluate. It's better to be out and take a step back. Let me think about it, as opposed to compounding the problem. And there comes a certain point too in a trade where it's like, I will not add anymore. Like, no matter what happens, I'm just not going to add anymore, because that's only going to compound the problem.
Right.
Unless it's part of your plan. So if a stock gets away from you and it goes parabolic, that's not part of the plan. Part of the plan may be for it to start to roll. Then you can start to add on the backside of it.
And just that, so yesterday you said you just lost 150, and that now doesn't affect your sleep or anything like that. You just turn off your computers and don't give a shit. You're just fine. That's pretty cool. Like,
Yeah, I don't want to sound arrogant. I don't want to sound too cocky about it, but it's just what I feel like in my developmental phase as a trader, it would take something like catastrophic to come along that would derail the momentum. I had some happen last year. I lost a good bit on Kodak and SPI. And I was like, you know what? I don't want to do this anymore.
Yeah.
And you can tell. I mean, they start churning volume and you're like, nope, you ain't getting me this time. Sorry.
yeah.
Sounds like you learned your lesson and took advantage of that with DWAC. I mean, that was kind of a similar spot move, because I lost about 75% of my account on SPI September 23rd, 2000.
I remember it well.
Yeah. Yeah,
Remember it well. I had longed a bunch too. After I lost on the short, I'd made money on the short in the morning because it popped up and it pulled back and then it consolidated. And when it did, it kind of like was fucking around and it went up for it. And I'm like, oh man, this is not going to be good. So I took it off after being up like 40 grand. I think I ended up losing like 60 on it. And then it pulled back and it consolidated between like 6 and 7. And I loaded up, and then it did one last little shake, and it got me out. And then it ran to like 45 or whatever it was.
Yeah. It got you good.
Yeah.
How do you manage risk then? Is that more of an artistic thing yourself, or when you put on trade plans, are they loose? Are they loose plans? Like, I've got a feel here, and I know if it goes down here, that's going to hurt. So, how are you managing risk?
So what I typically do is put on a quarter to an eighth and just let it work. So for me, say a quarter is like, say I want to go 100,000 on something. Okay, well, you have to plan to do that, because you can't just throw 100,000 out into the market. So you throw out, say, 25. Okay, how does the market receive that? Does it dip when you put the order in, and then it kind of collects and then comes back for it and then swipes it all at one point? Then you're kind of like, okay, well, hang on. Now let's give it some time, give it some room. We know kind of where the levels are probably going to be. And then you just let it move, let it breathe. I like to think of it as, I made the artist comment earlier. It's like a piece of music, right? It's being composed, and you have phases of that music, and then you have a crescendo. I want to be adding into the crescendo, which is going to be the maximum point of your risk reward, even though it kind of flies counter to what most people would say, which is, you know, short breakdowns, short weakness, stuff like that. Let the piece unfold. And when you're trading bigger, you have to piece in and piece out, versus back when I was trading, say like 1 to 5, 10,000 shares, you can kind of get in and out in one shot. And so it was kind of like you picked your spot just right. Can't do that. If you want to get size, you have to layer in. And I prefer to layer in where my average is never really like to the point where it's making me extremely uncomfortable. So it's easier to hold size when your average is near where the stock's trading, versus in the past, you start in too early and you're adding size into the move up, into the real strength. The next thing you know, you're in way bigger than you wanted to be. And now all of a sudden you have a problem. Like, yes, you're in size, but you're in size at a different spot.
Now, is there anything that you're like calculating as far as like, hey, there's this amount available float? So, you know, if for example, you say, I'm gonna throw in, say, 25,000 shares right here and just see how it takes it, something like that. And that's going to give you an indication as to like, I don't want to size up on this yet. Like we're not liquid enough, or.
Yes, you definitely want to size relative to the float. So I'm moving. Right now, we're going to be in low float season. So for the next month or two, it's all going to be 10, 20 million floats that are probably running. A lot of it's going to be hard to borrow. So it's going to be tricky trading. My personal favorite is a stock that's got like, say, 25, 50, 100 million shares, that's got $2 or $3 worth of range. One that is probably not going to get away from you, like more of a mid-cap style. It's not going to fuck you up, basically. Spray $2, $3. Like literally, I've gone to the bathroom and come back and had the stock be up like $3, $4, and you're like, oh well, probably could have just peed in a bottle or something. But it's
a stock is liquid enough and it's moving with you when you can go to the bathroom and not worry about it.
Yeah,
That's how I judge my risk management.
That's a good test. I hadn't thought of that.
The bathroom test.
The bathroom test. Can I go for a piss and it won't be $5 up by the time I get back?
Yeah. If so, then you're okay.
Yeah, I'm sized in appropriately then. Yeah.
Brandon bathroom test. I think we need to coin that. That's pretty cool, man.
Yeah, it's good stuff, man. I love it.
It is exciting. I think we're probably about out of time here. I know we've been going about an hour, but I think it's number one, it's been a lot of fun getting to know you. I think there are a lot of really cool traders like you who are consistently profitable, who are helping out guys, and you seem to you're always kind of posting some good stuff on Twitter. And if you got any aspirations, like you were just talking about earlier, with like I don't know, like creating your own little trading floor, or you're just going to kind of keep it simple, just you and Juice and the guys?
For now, it's going to be me and Juice and our little group, but eventually I do want to, one of my pet projects as I get, ideally, if everything goes to plan and all that stuff, I would like to go and teach underprivileged kids how to not really manipulate, but how to navigate financial markets. Because I think that's a big part of things that have been left behind in the school system with kids in general. They come out, like a lot of these kids now they get exam TikTok, and there's they have ways to communicate and stuff like that. But think there's a real need in certain communities for people to step in and say, hey, you know, there's alternative ways to, you know, to make money, if you will.
Yeah.
So ideally, that would be something that I would like to look for as I wind. I probably always trade as long as there's a market, but I would love to give back because, you know, one thing about trading, first of all, it's never supposed to be here on paper. Like, not a very good student, kind of a bad apple, if you will, gotten in a lot of trouble, all that stuff over the years. Still do occasionally, but you know, I feel grateful, I feel blessed, and I would like to. It's one of the reasons we have our movement on Twitter too, is to educate people and, you know, hopefully show them a better way of going about things or a different way of thinking. Not that it's the best way, it may not suit them personally or whatever, but I think there's a lane for helping other people in the future. And that's really what it's all about. Pay it forward.
That's cool, man. Is that
Yeah, I
something
love
you
that.
think you would that be a Louisiana endeavor since you're a Louisiana boy?
Yeah, we got a lot of my city in particular has a lot of little pockets of, you know, poverty, for lack of a better word. I would like to see some of that, you know, eradicate and, you know, spread it, and hopefully it spreads.
Yeah.
So let's see.
Good for you, man.
And it's not something I'm looking to make money off of. It's just something that I would like to do.
Cool.
Yeah, that's super cool. Well, I hope that happens. That sounds really good.
Yeah, keep us posted on that.
Yeah, we're a ways away. We still got some work to do here, but we're gonna make it happen.
I say in the meantime though, keep up the Twitter content. You tend to bring a smile to my face.
Good.
And I love traders that share. It's great. Like the P&Ls are great. I love it when I see P&Ls, but I love it when I see charts. And that's something that you and your guys do. And I think that's awesome because, you know, someone aspiring, I can look at that and then I can look and think, hang on, how did I trade? And I can compare and I can see. So that's brilliant. No, thank you. Keep it up.
Yeah.
Will do, my man. I plan to post. We got 113 days until Daytona.
I was just going to ask you that. How many days left?
I think it's 113 or 116. I forget, but it's getting there.
That's fantastic. And those of you who don't know, Brandon's Twitter name is Cole Trickle, right? So, which is a reference to the Daytona 500 movie with who was the
Tom
actor?
Cruise.
Tom Cruise, yeah.
You know what's funny is I don't even like NASCAR.
No, you're not a big fan?
No.
That's too funny.
You could have fooled me.
Well, you know, if I had to pick one, I'd probably go with Ricky Bobby as my favorite movie. Yeah,
There you go.
Ricky Bobby.
There you go.
Good stuff, man. Hey, listen, thanks so much for making time. And we've got in the recording, we've got your Twitter handle right next to your name. So
Okay.
we'll make sure everybody sees that. It's at crawfish_po boy. And make sure you guys give him a follow. Make sure you like, subscribe, and set up alerts here. So for the SimCast, and we'll bring you guys more great content like Brandon today. So thanks again, Brandon, for showing up for us.
Absolutely, man. You guys take it easy. I appreciate it.
Thank you very much.
Good stuff, man.